Good evening, students. Welcome back to our revision schedule and our revision classes. I'm sure you all are on your toes when it comes to your preparation, and you all are fully focused on your present preparations, and you have not kept any stone unturned. Correct? Now, in case you have any queries, in case you have any particular questions you want me to ask, you want me to address first, put it across. I'll first take up your queries. Then I will proceed with my topic. Let me know if you have particular question, doubt on any topic that we have completed till now. No? You are all on track, fully ready for your exams. Yes, very good evening, Lokesh, Shagupta, Dhruti, Gayatri. Very, very good evening to all of you all. I'll share my screen, and following the same routine, we will take up questions. So first read the question, students, or take a screenshot. Take a screenshot of this. Once you have taken, let me know. I'll just open the respective chapters also from our module in case you have any reference to be done. So in the meantime, go through the questions, go through that particular point. Chalo. Who will do the reading for me? Who will help me with the reading, please? Yes. Will anybody help me with the reading? Who all are present? Anybody would like to take a step forward in helping me with the reading? Yes, students. Go ahead. We can start with the first question. Okay. Gayatri has some problem, she's saying. No, ma'am, I haven't heard anything. Yes, let me then start. So, guide 3 has expressed her inability to read. That is not a problem, beta. It is okay. I'll read at my 1 second. Let me open the module so that in case we need to refer to the module, it should be handy in front of us. Chalo. No problem, Gulika. That's fine. Okay. So examine the applicability of TDS for the assessment year 25-26. Pay Limited, having its registered office in Noida, organized its annual company function at Gurgaon. Okay, fine. ठीक है. For this purpose, company engaged Vita Limited to arrange road transport. Okay, for its employees from Noida, Gurgaon and back at a payment of ₹1,000. Further, ABC Limited also entered into some contract with Vita for providing catering service. Okay, so these are two separate contracts. Now, student, first of all, how to approach this type of a question. So understand this, whenever you are approaching a question dealing with TDS, I always say you should first check eligibility or liability to TDS. Now, how do you check eligibility or liability to TDS? You should first see who the payer is. Because if the payer is individual HUF, then we all know that with respect to many payments, individual HUF is in general not liable for TDS until and unless individual is liable for tax audit. But that point is not over here, because here the person who is going to make the payment is a company. So our first point is done. Now comes the second point. So once you know that payer is liable or payer is eligible, the second comes the nature of payment. So I'm just giving you the steps. So payer, tick, done. Now comes the nature of payment, so that on that basis you determine under which section TDS is required, what is the threshold, what is the rate, is there any exemption or exclusion for a particular scenario. All these things can be identified. Now, what the person is doing, the person is, that is the supplier in this case, who is Beta Limited. So this is our pay, correct? So payer is A Limited, pay is B Limited. Now, what he is going to do, he is going to provide you road transport for your employees. And at the same time, you have also entered into one more contract for catering. Now, first thing, as we identified, the payer is a payer liable. Now we come to nature of payment. Now, can anybody tell me over here, this is under which section covered? That is the nature of this payment is covered under which section of TDS? One answer. Very good, Khushi. Any other answer? Okay. Very good, Lokesh. Very good, Gulika. So perfectly answered by all three. It is under 194C. So what is the nature of payment? The nature of payment is contract. Now, when it is a contract payment, the contract should be a contract for work. It should not be a contract for goods. For that, we have a separate section. It should not be a contract for providing any professional service, because for that, we have a separate section. It should not be a contract for rent. We have a separate section. It should also not be a contract which is for providing employment, that is, it should not be a salary contract. So please understand, students, all these are contracts, but they are specifically covered under some other TDS provisions. So by default, they are out of this. Now coming to what does this section covers? It covers contract for performing certain work. Now, what are the services which this person is going to provide? One is a road transport for employees, and the other is catering. Are both contract of work? The answer is yes, because that person is going to perform some activity for you. So what is contract for work? So contract of work is when you hire someone to do something for you. That is what is contract for work, as against contract for sale of goods. Now see, service contract, professional contracts, all are contract for work, but since they are separately covered, it won't be covered over here. So here, what is covered is the other contracts other than contracts which are already covered, like salary, professional services. Here, transport not covered anywhere, catering not covered anywhere, so it will be covered here. Now, can anybody give me the threshold? See, I'm trying to also give you approach for TDS, because normally I've seen students are a bit pressurized when it comes to TDS chapter. They find TDS very burdensome. But let me tell you, if you approach any question in these pointers, 90% times you will be correct. Also, when you are preparing, try to prepare, again, obviously taking examples, what I've been saying from first lecture of LVRC, that take a practical example and then apply the section. But how applying the section? In these pointers. So do this for TDS. You will find it very easy, firstly to understand, then to learn, and also to apply in exams. Okay. So I've got good answers. Excellent, Khushi. Very, very good, Lokesh. Gayatri, you are correct, but there should be something else. Nagaraja, you have not given me any amount. I want the amount. Very good, Gulika. So perfect, perfect. So interestingly, here there are two thresholds given. 30,000 is per contract and 1 lakh is per contractor in a year. So for one single contract, if it is exceeding 30,000, TDS is liable. And if the same person is given multiple contracts, then in a year, if the value cumulatively of the contracts exceed 1 lakh, TDS is applicable. Now, if you apply this to the first contract, you are not satisfying the limit of 30K, TDS won't be applicable on this contract independently. When you come to second contract, independently TDS is applicable on this. But for the first contract, even though independently TDS was not applicable, when you apply the second limit by aggregating the two, and both are in the same financial year with the same contractor, that is Beta Limited, the amount exceeds the limit of per contractor. So effectively, both payments get liable for TDS. And then comes the rate. Can anybody tell me the rate of TDS applicable here? I think already you have answered. Sorry. So I had got, okay, Nagaraja, correct. Gayatri, correct. Gulika, no, but I think you are telling me some old rate. Right now, this is not the rate. So correct rate is 2%. Is there any special exclusion, students? In the present case, okay, Lokesh, correct. So in the present case, yes, Khushi, right. Students, in the present case, is there any exclusion, exemption from TDS? No? Anything do you recall relating to transport? See, I'm not saying it may be applicable here, but since we are revising, let me revise the whole topic. Na? Maybe in some other question that may be relevant, it may not be relevant here. But is there something relating to transport when it comes to exclusion? Okay, Nagaraja says yes. Obviously, the manner in which I've asked this, the obvious answer has to be yes. So many times, see, this is also very important skill that even though you may not be knowing the exact answer, but the way an interviewer is asking or the way a group discussion is happening, if you're observant about the tone and the manner of asking, it can help. But those are interpersonal skills, not useful in exams because exam paper is dormant. It is having no expression. Yes, anyways. So if you're not able to recall, let me then take you, just time consuming, but it's fine. I think that is relevant because I found this topic to be slightly uh, difficult for students, slightly taken as a burden. Many students keep it as option. I'll say don't do that. Simply solve 50 sums like how you are solving. Just solve 50 sums on TDS. That should be fine to empower you to attend your exam questions on TDS. Only 50. Very good. Lokesh has come up with something. Sir, no TDS payment made to transporter owning not more than 10 vehicles at any time. Very, very good, Lokesh. So this is what I'm saying. No, Gayatri, that is not the point. 35K cash. See, this is what I'm trying to tell you, what I was trying to bring out. So yes, payment is the TDS rate, sorry, to be deducted is 1% if the pay is individual HUF. In our case, it was a company, so it will be 2%. Threshold limit we just discussed 30 and 1 lakh. What I was, yes. Now see, this also I was discussing. So this section applies to contract for work. So contract for work means where you are performing any activity for someone, like you're doing advertising for them, you're doing broadcasting, you're doing transportation of goods or passenger, catering, manufacturing, or supplying a product according to the requirement. So it is a job work. Huh? You're not supplying the goods like the owner of the goods. You're only manufacturing on their behalf, means raw material, etc., will be supplied by them. So that is what is contract for work. Now, what I was trying to, yes, this is the point. So this is one exclusion relating to this particular TDS. What it says, which is, I think, just now rightly pointed out by whom? By Lokesh. Yes. So what it says if the contractor is a transporter. Now our case is also transport, but the difference is here it is transporter for goods, not for passengers. So it is that you are a GTA in the language of GST. You are a goods transport agency or a transporter of goods. And what you are doing, you are owning 10 or less goods carriage at any time. And you are engaged in this business. And you have furnished a declaration to this effect along with your PAN. Then section 194 bracket C says you are not liable for, means your TDS won't be liable for being deducted. Now here, interestingly, students, I'll give you a link to this. When you go to PGBP chapter, you have over there presumptive income provisions. In that, 44A deals with exactly this person who is a road goods transporter, engaged in the business of flying, leasing, hiring of goods carriage, and owning not more than 10 trucks at any time during the previous year. So that same person is given the exclusion over here. Correct? Then I was saying the deduction of income tax will be made from sums paid for carrying out work or for supply of labor for carrying out work. In other words, the section applies only in relation to works contract, labor contracts, and will not cover contract for sale of goods. One. Similarly, contract for rendering professional services by lawyers, physicians, etc., etc., cannot be regarded as contract for carrying out any work, and accordingly, no deduction is available under this. But however, you know there is a separate deduction. Further deduction of income tax must be made at the time of credit or payment, whichever is early, fine. That is okay. So this is an important point of exclusion. Yes, Nagraj, I am talking about that same section 44A. So I wish that you all keep this in mind, because in some other question, this point may be relevant. Now, I come to this point, which I think Gayatri was highlighting, of 35,000 in cash. So in case payment made to transporter operator for plying, hiring, leasing of goods carriage, the disallowance will be attracted only if the payment made to person in a day exceeds 35,000. Therefore, payment in aggregate uh, in a day up to 35,000 can be made to transport operator, otherwise done by way of account, paycheck, etc., etc. Now, when you are saying this, Beta Gayatri, my question is, you are talking or you are saying this with perspective of 194C, right? Now, what is given over here? Certain concessions are granted to transport or operator in terms of cash payment under 40A3 and deduction under 194C elucidate. 40A3, which is again a provision of PGBP, that where you are computing business head income, the rule is if there is a payment in a day for one bill to one person exceeding 10,000, the expense is allowed for the business. And in this, there is a relaxation that when you are making a payment of transporter, which is who is engaged in goods transport, for them the limit is 35,000 instead of 10,000. Correct. But is that the case in 94C? That is my point. So that is exactly what is the question here. So 40A3 provides for disallowance of expenses if the payment exceeds 10,000, and in case of transporter if it exceeds 35,000. Correct. But again, this is vis-a-vis 48.3. Under 194C, tax has to be deducted in respect of payment made to contractor at the rate of 1% for individual HF or 2% in other case. However, no deduction is required to be made for any sum created or paid, likely to be created or paid during the to the account of contractor during the course of business of flying, leasing, hiring of goods if following conditions are satisfied. So here there is no mention of 35K, Gayatri. So this is what I was mentioning when you replied as 35K. So 35K condition is there, but that is vis-a-vis PGBP computation, right? But good that you raised this point so that this gets clarified, because many times when you are reading module and this point comes, you may read it in a different manner, but there is no such exclusion vis-a-vis 194C. So vis-a-vis 194C, the answer is simple. Whenever you are making payment to a transport operator whose number of trucks are not exceeding 10 in the year, who has given PAN and a declaration to this effect. What is the declaration? That I do not own more than 10. Then you will not deduct the TDS. That's it. It has nothing to do with the mode of payment. Mode of payment will come when you are computing your PGBP. I hope it is clear to everyone. So good point covered in this one question. Let us go to the second point. Now, what is the second point? Vijay Health Solutions, third party administrator, makes payment to various hospitals. Yes, this is again interesting. Towards settling cashless medical insurance claims on behalf of insurance companies during financial year, the total payment made by Vijay Health Solution to Life Care Hospital for cashless claims is 12 lakhs. Now go step by step. Who is the payer? Payer is again a company, Vijay Health Solutions Limited. Fine. So no challenge. It is not individual HF. Second, what is the nature of payment? So this payment, whatever is made by this TPA, third party administrator, to various hospitals, it is covered under which provision, if you can recall? Yes, students, have you read any such thing anywhere in your TDS chapter? If not, then I'll take you to the respective point. Lokesh, okay, he says 194D. Chalo, let me just talk about 194D then. So you can give me two answers, students. One, my original question, that this payment is covered under which section? What is this point referring to? Do you recall reading any topic section in your TDS chapter relating to this? Second, parallelly, you all can answer me what is 194D? Because Lokesh says this payment is covered under 194D. What is 194D? So I expect answer on either lines. You can give me answer for any. Very good, Shagufta. You're correct. So Lokesh has a reason why he is linking this point to 194D. Very good, Gayatri. Yes. Nagaraja, how it is covered in 193? Perfect, Gayatri. So first, let me answer 194D, Lokesh. Your logic is correct because 194D deals with insurance commission. But please understand, see what is the nature of payment. Who is paying to whom? 194D deals with TDS where the insurance company is making payment to its agents of the insurance commission. And on that commission, the TDS is deductible under 194D. Correct? So is it over here insurance commission? Is it insurance commission or see that is why I said nature of payment. Until unless you understand the exact nature of payment, classifying it in the correct section of TDS will be difficult. Correct? So what is the nature of payment? Let me explain you. So let us say I have taken, sorry, what happened? So I have taken a mediclaim policy from let us say some insurance company, let us say GIC of India. Now, because of hospitalization of my mom, I had to incur 5 lakh rupees and I applied for claim to GIC because I have a mediclaim policy for which GIC says, okay, I will be reimbursing 4.5. Now, in this case, what happens? I want to go for cashless. So I present my claim file to the hospital. Let us say the same hospital, whatever is the name, Life Care Hospital. So I submit to them the claim file. They process the claim. Processing means they check with my insurance company and all. And they tell me that, okay, your claim up to 4 is sanctioned. So you pay the balance 50 and your mom will be discharged. So I pay balance 50,000. I bring my mom back home and I don't pay this to them. Why? Because this is what my insurance company is going to do. Now, my insurance company GIC is itself not going to look after claims because there would be thousands and maybe multiples of thousands of claims arising every month. So what GIC does, it appoints a person in between GIC and hospitals. This person is called as the TPA. In fact, hospital had also contacted the TP only when I had given my insurance claim file to them. Ki, sir, I have an insurance claim, so I won't be paying you any amount. You get it from the insurance company. So they go to the TPA. The TPA is the person who does all the processing, etc. Obviously in line with the insurance company. And periodically, what TPA will do, all these claims which are sanctioned, periodically, maybe weekly, fortnightly, it will make payment to the hospital. Now it is making payment how? So GIC is giving that money to TPA. TPA is passing it on to the insurance, to the hospital, right? Now, once you have understood this, let us read this question again. So Vijay Health Solutions, which is a TPA, makes payment to various hospitals towards settling the cashless mediclaims on behalf of insurance companies. So insurance company has given the money to the TPA. TPA is now making payment to various hospitals. Presently, it is making payment to Life Care. I hope now you'll understand the example. Now, during the financial year 24-25, the total payments made by Vijay, who is the TPA, to this particular hospital for the claims is rupees 12 lakhs. Now, the question is whether there is any TDS applicable. Now, one TDS could have been 194D because it has some connection with insurance. That is gone. There is one more insurance related section. Chalo. In fact, it is a section related to, I think, insurance claim only. Chalo, I'm giving you hint. So 194D is not applicable, but I'm giving you a hint. There is one more relating to, let me go to the summary. I think that will be faster, but then that summary may not have all the details, but at least chalo, let's see. Yes, so if anybody can recall, you can tell me. There is one more section which deals with the insurance itself, insurance claim itself. Okay. Oh, good. Hey, Nagaraja, 194J is our present point, which we are going to see, but 194J is not relating to payment of insurance claim money. See, 194D was insurance commission. 194DA, what is that? Sum under life insurance policy. So as I said, now there is a section for insurance claim also, but it is under which policy? Life insurance. Presently is our claim under life insurance? Answer is no. So let us proceed then. Now, this point, which is our point of contention, that is fees for professional technical services, royalty, non-compete fees, remuneration. One second, I'll open this PDF twice. So one the regular PDF, one for detailed. Okay, this I'll use for detailed. Now, when you go to 194J, there is some discussion in 194J relating to this type of payment. If anybody has located that page, let me know. It would be faster for me to navigate. It will save our time. See, this is that section. Now, in 194J, what is covered? Professional service, technical service, remuneration fees, commission by whatever name called, other than those on which tax is deductible under 192, which is between company director, royalty, non-compete. Now, for this, TDS rates are given, time of deduction, threshold is 50,000 in all cases except one case. Now, this point, there is a discussion relating to this exact case, what is on your hands. Yes, see this. Now, what is the point? Whether TPAs are liable to deduct tax under this section on payment made to hospitals on behalf of insurance companies. Now, first question is 194J. How could this payment come under 194J? First question. What is that nature because of which this is getting classified under 194J? Any idea, students? Because that you should understand before we understand the treatment given. Why it has to be covered under 194J at all? Why is this point here? Why CBDT has to clarify something relating to this? Is it not fees for the medical services that you have availed, though paid by the insurance company? And if it is, then is it not covered in this category, that is fees for professional services? Because profession includes which is relating to medical, engineering, right? And some notified other professions. So that is a different thing. But Medical is covered in this. So the question comes that when a TPA is making payment to hospitals on behalf of the insurance companies, whether the payment made would be covered here. So for this, there is an old circular of CBDT. What it has clarified that TPAs who are making payment on behalf of insurance companies to hospitals for settlement of their medical claim under schemes including cashless are liable to deduct TDS under this on all such payment to hospital. This is because services rendered by hospital to various patients are medical services. So medical means they are professional services, and therefore they are covered under provisions of 194J. So since professional services are covered, medical is a professional service, hence TDS is deductible on this service, even though this payment is not made by you to the hospital, but on your behalf, it is made by the insurance company through their TPAs. So here, if you come back, so what will be the rate applicable? The rate applicable depends upon the nature of payment. So if it is fees for profession and it is exceeding 50,000, so TDS at the rate of 10% is applicable. So in our case, both the requirements are satisfied. One, it is a professional service. Two, the amount in a year exceeds 50,000. Hence, it will be liable for TDS under this section. Is that clear, students? I hope you are now able to connect to TDS. In fact, it may also happen that suddenly you may find TDS more interesting. Yes, it is interesting. Okay. Again, applicability of TDS TCS in following cases. Mr. Subhash, salaried person, pays rent. Very important, students. Right? 52,000 per month to Mr. Raj from April 24. Subhash vacated premises on 31st of August 24, so not completing the year. And next is what if he vacated the premises on 31st of October 24. Firstly, payer, not pay. Payer is individual and nature of payment is rent. Rent for its residential accommodation. Now the first question is, under which section, if at all, TDS is applicable? Good. Nagaraja has given one provision. Lokesh has given one more. And you are right when you are saying this, but you are wrong when you read those sections. Shagufta says, Khushi says, Lokesh again repeats the same. I don't know why. Chalo. So majority of you all are saying I. One of you is saying IB. I agree. As I said, now what you are saying, it is correct that rent is covered, but all rents are not covered. Specifically, this rent is not covered. So let us first see from the summary. See, in fact, I always refer TDS like this. Whenever I'm solving a sum, I first go to summary. From summary, I get the comfort of understanding the point, and then I come back to the main provision. So summary gives me the overview in short, so that at least I'm comfortable with the act with the section, and then I come back to the main provision. Now, as I said, is correct, which is mentioned by all, but there is small problem. When does I apply? That is where my first point, payer, is very important. Where the payer should be a person other than individual whose total sales, gross receipts or turnover from business or profession carried on by him do not exceed 1 crore or 50 lakhs. That is who is not liable for TDS. So if an individual is paying rent, individual is not liable for TDS, then 194I will not apply. So for application of 194I, either you should not be an individual HUF, or if you are an individual HUF, you should have a business whose turnover crosses 1 CR or a profession whose turnover crosses 50 lakhs, making you liable for tax audit. In that case, the limit would have been per month and you would have been liable for TDS, but unfortunately, I is not applicable to you. Then coming to the second answer, which only one person gave, who gave this answer correctly, Khushi. So she says it can be IB. Again, let us check what is IB. So IB is payment of rent again. And now by whom? By certain individuals. Who are these certain individuals? Exactly the one who are kept out of 194I. So 194I does not cover individual HF who do not have business or whose business turnover is below the limit. That is, they are not liable for tax audit. They are not covered in I. Exactly for them, IB is applicable. See, who should be the payer to be covered in IB? Individual HF. Other than individual HF whose sales turnover gross receipts exceed 1 crore, because the moment you are exceeding 1 crore, you are going in I. So where you are below 1 crore, or you are not having business at all, you are covered in IB. Correct? So effectively, if at all TDS has to apply, in this case, it will apply under IB. So coming back to my point. So payer, individual, but not liable for tax audit, because in this case there is no turnover at all. There is no question of seeing the limit of turnover. Nature of rent is I, but I have a section which makes me liable for TDS. But then comes the most important point, that is threshold. Now I know which section I have to check. So I will check that section's threshold applicable to me. Also, if there is any specific exclusion applicable to me, so that I'll get to know if at all finally I am liable for TDS. Now, what does the threshold say? Rupees 50,000 per month or a part. And this is interesting. The last column is interesting. When are you liable to deduct this TDS? At the time of credit of rent for the last month of the previous year, or the last month of tenancy if the property is vacated during the year, as the case may be, to the account of the payee, or at the time of payment, whichever is earlier. Now, in this case, firstly, what makes you liable for TDS? The threshold is 50 lakhs. Oh, sorry, 50,000. I'm sorry, my bad. 50,000 per month. Now, since you are exceeding this 50,000 per month, you will be liable for this TDS, correct? No doubt in that. Now, the main point. What is the main point? For this TDS, the limit is threshold is being satisfied. I'll just go back to the question. Yes, threshold is being satisfied. You are making monthly payment of rent of 52,000. So TDS is applicable. And now there are two pointers. First, he vacated the premises on 31st of August. Second, if he vacates the premise on 31st of October. Now, what is the difference? The difference is that during this financial year 24-25, TDS rate had changed in between. Now, just for ease of not spending much time, I'm directly showing you the answer. So in answer, if you see, you'll find this, what I'm trying to say, that if Mr. Shubhas had vacated the premises on 31st August, the tax would be liable to be deducted from the rent payable for August 24 at the rate of 5%. But if he is vacating the premises on 31st October, then TDS is liable to be deducted from rent payable for October at the rate of 2%. Why? Because the TDS rate till 30th of September is 5% and thereafter it is 2%. So for you in this question, yes, very good, Lokesh. Lokesh, you have written 31st of August. It is, I think, 30th of November, September. So 1 month. I think that is a typo error because your second point is correct. You have written 1st of October. So I think it is a typo. So, as rightly pointed out by Lokesh also, that if your TDS is up to 30th of September, it would be at 5%, which is in the first case. And in the second case, where the TDS is from 1st October onwards, it is at the rate of 2%. So the difference is in the TDS rate. Acha, okay, understood. Understood, Lokesh. So you have answered as per the question. Perfect. Understood now. So in the first case, where you are retiring, sorry, not retiring, you are vacating on 31st of August. Till then, the rate is 5%. So for whatever months you have paid the TDS, we'll deduct TDS at 5%. If you are vacating in October, then for all the months, you will be making payment of TDS in October at the new rate. That is what is the point. Okay. Clear? And that is common. So, Nagaraja, if PAN is not being furnished, there is already a provision which says TDS will be at a higher rate. That is correct. That is common. 20%. Right? Now, coming to the second case. ABC trader, partnership firm, engage in wholesale business of Tendu leaves. Okay. Turnover for the previous year, 9 crores. During the financial year, it sold Tendu leaves worth 12 lakhs to XYZ Limited. XYZ does not provide its PAN to the ABC trader. Now here, ABC trader is seller, right? In case of TDS, buyer has to deduct TDS. But if it is the seller, then it is not TDS, it is TCS. So this case is a case where the seller is required to collect, not deduct, but collect TCS. Now, when TCS applies, so for TCS, there is a section 206C under which there are multiple subsections providing for TCS in different scenarios. Now, out of this particular case of Tendu leaves is covered in subsection 1. And as per this subsection, if you are a seller of Tendu leaves, then you are required to collect TCS along with your sale bill at the rate of 5%. Now, there is one more point given over here that the buyer has not provided PAN. Now, in this case, where the buyer does not provide PAN, TCS provision states very good. Parthasarthi has pointed out correctly. Lokesh has also pointed out correctly. So, when PAN is not provided by the buyer in case of TCS, what is our present case, then the rate, which is originally 5%, now becomes 10%, right? Let us proceed. Now, moving on to the next question. Applicability and amount of TDS. Okay. Now, what is the point? Nexus Tech Private Limited, a company engaged in business of manufacturing electronic goods, reported a turnover 12 crores in the previous year. Okay, good. During the current year, the company made following purchases. So now here, this person is the buyer. So again, we go back to TDS. So payer, correct? Who is a payer? It is a company. Now in this case, students, if you all remember, there are two provisions parallelly. So now it is trading of goods. So what is the nature? Nature is trading of goods. Now, in case of trading of goods, that is purchase sale of goods, there is TDS, TCS both, and we have to check the applicability, which one would apply when. Now, here it is very important to know the turnover of your previous financial year because that determines the eligibility. Okay, so since I've given you the nature, and anyways, payer is a company, so no problem. Can anybody tell me the section number under which this TDS attracts so that we can check the requirements? Okay, very good. Which is the parallel TCS provision, students? Because we also need to check if TCS applies. So you all are perfect. Siddha, Shagufta, Nagaraja, Khushi, that the section for TDS in case of trading is 194Q. Can anybody tell me the parallel provision under TCS for the same? Because on trading, both TDS, TCS applies parallelly. And that is where it is interesting. So here I'm opening the TCS part. Okay. TDS rightly pointed out 194Q. Now, what is the condition? The condition is that the nature of payment is purchase of goods. So it is trading. Threshold is it is should exceed 50 lakhs in a previous year. Now, what is important? Payer. Buyer who is responsible for paying any sum to the resident for purchase of goods. Buyer means a person whose total turnover exceeds 10 crore in the previous. So if the buyer's turnover is not exceeding this limit of 10 crores in the previous financial year, TDS will not apply. Very good. So for TCS, I'm getting answers, but why two different sections? Somebody saying 206C, 1H, 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 and then somebody saying 1F. So let me first go to TDS part, then we'll see TCS, and then we'll collate. So one person's transaction is exceeding 50 lakhs in a year, and the payer should be a buyer whose turnover in the previous financial year has exceeded 10 crores, and then TDS is 0.1% exceeding 50 lakhs. This is important. So 0.1% is not on total on amount exceeding 50 lakhs. In other cases, whatever is the threshold, if you exceed, it is on total. Here it is on the excess amount and at the time of trade, etc., whichever is earlier. Now important is what does TCS says. So let us go to TCS. How I'm seeing the page of TCS. 206. Taken wrong set of notes. Sorry, students, it won't be here because I am referring to latest notes. 1 second. Just take the correct set of notes. Just allow me 2 minutes. Just take the right set of notes. Yes, now I have the right set for your reference. ठीक है. So now when I go to TCS, we'll get the correct rates. Now what is the TCS for seller of goods as per section 206C1H? Correct. So this is the right section as pointed out by many. Tax is also required to be collected by seller who receives an amount in consideration of sale of goods where value exceeds 50 lakhs in the previous year, other than exports, which are covered by some other section, or goods which are covered by other section. Tax is collected at 0.1% of the sale consideration exceeding 50 lakhs. Taxes, now this is the most important part. Now, if you see the first A and B pointers, you will find that it is a replica of 194Q. So the sections are overlapping. However, what it says, tax is not required to be collected if buyer is liable to deduct tax at source on the goods. It means when both provisions are parallelly applicable, TDS, TCS, this point clarifies that you have to give the preference to TDS. So if TDS applies, TCS will not apply. So coming back to this point, the payer is a company whose turnover in the previous financial year exceeds 10 crore. So conditions for making deduction applies. So we will go by 194Q, that is TDS section and not TCS section. Now we'll check whether in the first case TDS applies. So what is the first case? You have purchased these goods from a person, vendor A. Goods are worth 60 lakhs. Now this is interesting. 25 lakhs April, 35 lakhs in July. This is how it makes 60 lakhs. Payment 20 lakhs in June and balance in September. And above that, the seller has not submitted you the PAN. Now in this case, two things are important. One, that TDS is applicable, the original rate is 0.1%, on the amount exceeding 50 lakhs as per the basic provisions. But as we know, whenever PAN is not furnished, the rate increases. Can anybody tell me what is the higher rate of TDS in this case where PAN is not furnished? Shagufta 20%, Siddha 1%. I don't remember either of these rates. Kushi, very good. So the answer is 5%. So where in this case, where TDS is at 0.1%, then yes, Gayatri, correct. And if PAN is not provided, it would be deducted at the rate of 5%. But importantly, it won't be deducted on full amount. It would be deducted on 60 minus 50. So that is on 10 lakhs at the rate of 5%. So whatever is the amount, correct? Now with respect to the second vendor, second transaction, 48 lakhs, two parts. Now, what you will do in this case? How much will be your TDS? Students, how much would be the TDS in this case? Very good. Correct. Kushi, correct. Nagaraja, very good. Yes, students. Answer is no TDS. Why? Threshold not crossed. Since threshold not crossed, TDS not applicable. Right. Great. Now, second case, in January 25, Mr. Sumit engaged in business having turnover of 1.2 crores in the last year, enters into annual maintenance contract with ABC, a resident company, for 540 plus GST 18%. Wow. Sumit made the payment in February and the company has not provided its PAN. Wow. Very good. Now, firstly, who is the payer? The payer is an individual, and turnover of the individual is 1.2 crores. Now, the moment the turnover is 1.2 crores, then the section applicable to you is different. Had it been below 1 crore, or had you been a salaried person not having business, the section itself would have changed. Now here, which is the section of TDS which applies? Or firstly, let me ask you, what is the nature of payment? Because until unless you identify the nature of payment, it is there in the name itself. What is the nature of payment? It is contract. Now for contract, again, since the person is individual, payer is individual, but fortunately for you, the turnover is exceeding 1 crore in the previous financial year. So for you, the section that applies is 194C. But again, since we are revising, I'm not interested in only going to the answer for this question. What would have happened had he been, like in the previous sums we had, individual whose turnover is below 1 crore or they are salaried persons? Then what would have happened, students? Had this being the other scenario, tell me, because that is also important so that you parallelly revise both. Hmm. Okay, Khushi, very good. Nagaraja, you are close. Very good, Khushi. So 194C is the relevant provision for us, right? Why? Because the payer is individual. Now see, you just see the list of payer, it is central government, etc., etc. An individual HF whose turnover has exceeded 1 crore. So we are falling here, but I want to also revise the other possibility. Had this person not having a turnover at all or having a turnover which is less than 1 crore, then what would have been the scenario? Now there is this 194 IB, somebody said. So I'm just opening that section so that you can cross check. So Nagaraja, what is 194 IB dealing with, beta? We just checked this in one of the previous questions. It is only dealing with payment of rent. So definitely we are not paying rent. It is annual maintenance contract charges. So can it fall here? Yes, rightly pointed out by Khushi, Gayatri. Yes, I'm talking about 1 crore, beta. So if your turnover is up to 1 crore, that is where I'm talking about, which is not applicable in this question, but we are revising parallelly. So had your turnover been not exceeding 1 crore, 194M would have applied. See what payments are covered in 194M? Payment to contractors, commission brokerage, and even professional fees. And who is the payer? The payer is individual HF, other than those who are required to deduct TDS under these sections, and in those sections who are required, whose turnover exceeds. So if your turnover is exceeding, you are falling in the respective sections. 194C for contract, H for commission, J for professional fees. But if your individual HF and your turnover is not exceeding, then for three payments, contract, commission, and professional fees, you fall under 194M. What does 194M says? Again, TDS rate has changed. Up till 30th of September, it was 5%. Thereafter, it is 2%. And when TDS is to be deducted at the time of credit or payment, whichever is earlier, what is important is the threshold. For 194M to apply, the threshold is 50 lakhs during the year. So if your payment towards contract or for commission or for professional fees exceeds 50 lakhs, then under 194M, you would be liable for TDS. Now, so keep 194M in mind. It is very important section. It is required in your exams in certain question answers. Now here for us, 184C, the regular one is applying because I am an individual HUF whose turnover is exceeding 1 CR in the previous financial year. Now, what it covers? It covers payment for contractors. But again, as I always say, there is an exclusion. What is that exclusion? That you find in the threshold. So per contract, 30,000, per contract, 1 lakh. Most important is this exclusion. Individual HUF need not deduct tax where sum is credited or paid. So it means as an individual HUF, if you have given a contract which is for your personal use, then this section excludes TDS. Otherwise, the TDS rate depends upon who the payee is. If the payee is individual HUF, 1%, otherwise it is 2%. Now, keeping all these things in mind, we apply. So Sumit, having turnover over 1.2 crore, so 194C applies. Keep in mind the exclusion. So exclusion is where the contract is for personal use. So annual maintenance contract with ABC Limited, a resident company. Mr. Sumit made the payment and the company has not provided the PAN. Now here a question is that it is not mentioned in the question whether the contract is for personal use. So I think you should give a conditional answer, or is there something coming out from the question? as to what the payment deals with? At least I am not getting. So for me, the answer would be conditional. I will write the answer that in case this contract is for maintenance of, let us say, your house or any of your personal property. For that, this maintenance contract is entered, TDS will not apply. Secondly, since nothing is mentioned, the second answer would be that in case this is not for any personal use, so this contract is relating to maintenance of your business assets. In that case, TDS is applicable. Now, what is the threshold? 30, and you are already crossing this because your contract amount is 540. But now coming to the next question. Contract is 540 plus 18% of 540. So the amount that you are going to pay is higher. We'll calculate what that amount is. My question is, TDS applies on which amount? This amount that is before GST or the amount after GST? You can simply write B if you feel before GST. If you feel after GST, you can write A. So on which amount TDS applies, students? Amount before GST or after GST? Very good, Shagufta. TDS applies on which amount? Before GST, that is excluding GST, or after GST, that is including GST. In this example on 540, or the amount which I will get after adding 18%. So let me just use my calculator. So 540 plus I add 18%. So it is 637.2. 637.2. So this is after GST. So my question is, TDS applies on which amount? So TDS is applicable in the assumption that it is not a personal purpose contract. TDS applies on amount before GST, not on amount after GST. There is already a clarification on this. Interestingly, originally when the clarification had come, it was wrongly written as that it will also be on GST. So there was a confusion. However, later on this was resolved, and now it is clear that there can be no tax on tax. So this also applies in case of TCS. So where TCS is also to be computed, the question is TCS will be computed on what amount, whether including GST amount or excluding GST amount. It is always excluding GST amount. Correct? And now coming to the last part in this, what rate? Now we read that the rate is 1% where the pay is individual HF and where the pay is company, other than individual HF, like in this case, it is 2%. So the rate should be 2%. But again, the problem is company has not given PAN. Now what will happen if the company does not provide PAN? Super. So the answer given by Nagaraja, very correct. It is 20%. Yes, correct, Khushi. Perfect. So, yes, Shagupta, correct, beta. Now, again, examining liability of tax collected and deducted at source. SBI pays 70,000 per month and 60,000 per month as rent to central government and Mr. Kunal respectively for building in which it has its branches situated. Now, payer is SBI, so it is not individual HF. Nature of payment is rent. So which section applies? Section is 194. Correct, Kushi. Yes, Nagaraja, very good. Right, Lokesh. So it is 194 I. So let us go to I. So again for I, the payer should be any person other than individual HF whose turnover is not exceeding 1 crore. If individual HF's turnover is exceeding 1 crore, again they are also covered in by I. Now when TDS applies, when the annual rent exceeds 240 and the rate is 2% for plant machinery, for land building it is 10%. Okay. Any specific exclusion over here, students? Any exclusion here, students? Very good, Gayatri. Very good, Kushi. So there is a specific exclusion under the law which says that whenever any payment, not only rent, in this case we are dealing with rent, whenever any payment is made to government, no TDS is deducted. Then logical, na? When you are making payment to government and you are deducting their TDS and paying to them only, what sense it makes? So that is why you will not be deducting TDS when you are making any payment. Here it is rent, it may be interest, it may be not professional charges, sorry, but any payment where government is the pay, TDS will not apply. So in our question, first payment is outside the purview. Now for second payment, pay is individual and the threshold is 240 per annum. Threshold 2.4 per annum and exclusion payment to government. Okay. Now your rent is 60. So 12 6 is 72. So TDS applies? Yes. So for payment to Kunal, TDS applies and the rate 10%, nothing given about PAN. So we continue with the regular rate. Second, payment is made to Mr. Deepak, who is a transporter, owns 8 good carriages, and he does not provide his PAN. What to do? Now here it is not given who is the payer. So chalo, section, anybody can tell me? Payer is not known. Section. Hmm. Okay. Very good. As rightly pointed out by many of you all, that since PAN is not provided, hence the shield under 194C is not applicable. Even though the number of goods carriages are less than 10, but the requirement was in order to get that protection of 194C, you were supposed to provide PAN, you means the transporter, along with a declaration stating that since my number of vehicles is less, hence I'm not liable for TDS. Hence TDS applicable. Correct. Very, very, very correct. In this case, TDS applies. Person is individual, so TDS rate will be 1%. Correct? No, sorry, not 1%. PAN is not provided. Sorry. So TDS rate will be not 1%. 1% would have been had the PAN been provided, but had the PAN been provided, he would have been excluded from TDS. Correct. So since PAN not provided, hence TDS applicable, and hence TDS applicable at higher rate. And the higher rate is correct. Nagaraja, correct. Khushi, the rate is 20%. Perfect. Correct, Sid. You're right. Super. Okay. Sure. We'll take a break. So now we have done few cases of TDS. Now before we proceed to written filing examples, let us take a 15 minutes break. Fine, students? Students, let us start. So, we are dealing with revision for TDS, TCS, and also the topic of filing of returns. Now, let us go to the next question. What it says, enumerate the cases where a return of loss has to be filed on or before the due date specified under 139(1) for carry forward of losses. I'll put this question differently. Which losses can be carried forward only if the return of that year in which the loss has occurred is filed within the due date? In other words, if you fail to file the return of the year of incurrence of loss, that is the first year in which that loss has incurred, if you fail to file the return, that loss cannot be carried forward. So you have to name those losses. Or other way around, you can name those losses for which carry forward is allowed even though return is not filed within the due date of filing returns. Can you name those losses where even if return is not filed within the due date of filing return, still the law allows you to carry forward? So other than that, remaining losses, it will be compulsory filing of returns for getting the carry forward. Yes, tell me. Tell me. Okay. Okay. Gulika, correct. Yes. Siddha, correct. Gayatri. No, Lavanya. No. So there are two losses. One is house property loss. It can be carried forward even if the return for the year of loss is not filed within the due date of filing returns. Point number one. Point number two, you have losses which are allowed to be carried forward as per provisions of PGBP head itself. I repeat, you have losses which are allowed to be carried forward as per provisions of PGBP head itself. Unabsorbed depreciation, unabsorbed capital expenditure on scientific research, and unabsorbed family planning expenses. These three losses, which are over there called as unabsorbed, depre, capital scientific research, family planning. These three are carried forward not by virtue of the chapter of set off. See, chapter of set off covers 70, 71, 71B, 72, 73, 73A, 74, 74A. These sections. But these three losses are carried forward as per the provisions of the respective section, like unabsorbed depreciation allowed to be carried forward by virtue of section 32 itself, which is the section for depreciation. 32 bracket 1 deals with the allowance, that is the computation and allowance of depreciation. 32.2 deals with carry forward of depreciation. Similarly, when you go to section 36.1.9, which deals with family planning expenses deduction, the same section provides for carry forward. Similarly, when you go to section 35, which deals with provision for set off of in-house scientific research expenses, it also allows for set off of capital expenses on in-house scientific research, and the carry forward is also provided there itself. So these three losses arising from some expenses remaining unabsorbed, depre, within scientific only in-house capital scientific, not others, and family planning. These three expenses, if remaining unabsorbed, they can be carried forward under the respective sections of PGBP head. For them also, the condition of return being filed within the due date is not applicable. So these two losses, HP loss and these three losses covered or provided to be carried forward as per the provision of PGBP head itself. For them, this rule does not apply. They can be carried forward even without the return of loss being filed within the due date. Now, another question, interesting one. Mr. Vishnu has undertaken certain transactions during the previous year 24-25. You are required to identify the transaction in respect of which quoting PAN is mandatory. So we know that income tax law has identified for which transactions PAN quoting would be compulsory. So what Mr. Vishnu has done, one transaction is sale of scooter. So maybe his personal scooter he has sold off. Second, he has made payment of life insurance premium of 67,000 in a year. Then he has purchased a plot of land. Now his purchase consideration is 9 lakhs. Stamp duty value is 11 lakhs. Third, he has applied to a bank, sorry, not company, means banking company, that is PNB, Punjab National Bank, for issuance of credit card. Now you have to determine in which of these transactions quoting of PAN has been made obligatory by law. Siddha is saying, okay, acha. So you have given me the answer. Fine. Okay. Fine. Good, Gayatri. Good, Siddha. Anybody else? Lavanya, you are right. But there are other situations as well, but you are right. So here there is no requirement for PAN. In case of insurance premium, the condition is if the premium in a year exceeds 50,000, you are required to quote PAN. Since here your premium is exceeding 50,000, quoting PAN is compulsory. Now, in case you have purchased a plot, the limit put is 10 lakhs. But 10 lakhs is not for your sale consideration, but for the stamp value. So, for stamp value purposes, or the stamp valuation is exceeding 10 lakhs, you are required to quote PAN here also. And next, when you're applying for a credit card, again, quoting of PAN is made obligatory. So Lokesh, for one, PAN is not required for first case, for second, third, and fourth. But you have to also mention the reasons because you cannot simply say second, third, and fourth. So definitely, as I've been saying, whenever you are writing answers in any subject of law, you should always justify your answer by quoting the relevant provisions, right? So here it is given. Fine. Now we proceed. Again, we have some situations relating to tax deduction collection. So let us start. First, Mr. Harish bought overseas tour program. Do you all remember? Do you all know anything relating to overseas tour program? Any provision under income tax law for overseas tour program? In simple words, foreign tours. In very simple words. Salaries. What is this, Nagaraj? Salaries is what I didn't get. Are you saying it is there is some relevance of this in salaries chapter? This is what you mean to say? So, in case if you are not recalling, I'm just trying to locate the page. One second. So there is a provision under TCS which provides for TCS on tour packages. Okay, Nagarajan. But then it is not necessary it should be foreign tour, no? But it can be what your point is correct. But that has nothing to do with foreign tour itself. Okay. So this is that point. Now I know this is not very common provision which will be required regularly. But since this is one of the uh, common expenses that we Indians do, hence this payment has a very important relevance. This is under the TCS. So where uh, an authorized dealer is receiving amount under liberalized remittance scheme of RBI for remittance from a buyer being a person remitting such amount. Second, being a program who receives an amount from the buyer who purchases the package. Tax has to be collected at the time of debiting the amount payable by the buyer or at the time of receipt of such amount from the said buyer by any mode whichever is earlier. Now, what is the rate of TCS? Where the amount for the purchase of an overseas tour program 5% if it is up to 7 lakhs, 20% thereafter. Where the amount is remitted outside India for education, etc., we are not concerned with this. Cases where no tax is to be collected, no TCS by the authorized dealer on an amount in respect of his sum has been collected by seller. Okay. No TCS if buyer is liable to deduct TDS. Fine. No TCS if buyer is central government. Okay. Accordingly, CBDT has wide notification number this notified that provisions of this section would not apply to person being a buyer who is a non-resident in India. Correct. So for us, what is relevant is this part where the amount is for purchase of an overseas tour program package. 5% for first 7 lakh rupees and 20% beyond 7 lakhs. So student, this is the provision applicable to us for this particular question. So here the package is of 10 lakhs. So what will be our answer? Out of 10 for first 7, the tax would be at the rate of 5%. And thereafter on the balance, it will be at the rate of 20%. Correct? Anybody, any questions on this? I know you all may not be very well versed with this because this is not something very common, so we tend to ignore it. But you should keep one thing in mind that since nowadays we are traveling a lot and people are preferring foreign packages over Indian tour packages. So there is a possibility that in your articleship, you will have any of the clients who are actually buying these tour packages. And that is why even in exams, this becomes important. Perfect. Moving ahead. Mr. Aditya pays 55 lakhs April to Mr. Naresh. Okay. For supply of labor, construction work of his factory. Very good. Now here payer is individual. Now the moment payer is individual, what is important to check is which section, because now the payment is towards supply of labor for carrying out construction. So this is for carrying out work. So it is for work contract. Now the moment we say contract, we know section 194C. But for 194C to attract, the payer turnover of previous year should exceed 1 crore. Now what it is given? His turnover in the previous year was 95 lakhs, so 194C does not apply. Now what? Any other section in which the scenario may get covered? Yes, Lokesh. Correct, Gulika. Yes, correct, Lavanya. Very good. Yes, Khushi. Very good. So, as we discussed earlier also, now we'll have to check 194M because I won't apply to me. Sorry, C won't apply to me. So I'm going to M. This, if you remember, I discussed even though it was not applicable in that question because this is a very important section applied in many questions. So the payments which are covered in 194M are payment to contractors, commission brokerage, is for professional services. So professional fees, these three payments are covered. Applicability is where the payer is individual HF, who is not covered in those sections. Why? Because the turnover is below the threshold. Now in this particular case, the moment you are covered here, you have to check the threshold. Here the threshold is a higher threshold of 50 lakhs for the year. Interestingly, in this question, the person has made a payment of 55 lakhs. So it is falling in higher threshold. Now comes the rate. As we know, there is also a change in rate in this regard. So the rate, which was originally 5%, has been lowered to 2%, but the dates are important. 5% if it is up to 30th of September, thereafter 2%. In our case, what is the scenario? It is during the first month itself. So finally, our answer will be 50 lakhs into 5%. Correct? Yes, Lokesh. Yes, Golika. Very good. So all of you all have rightly pointed out the correct section. So now you all are having a control command over these provisions. That's a good feeling to me. Okay. Let us move ahead. Following cases relate to previous year 24-25 total income of a CESC or total income of any person in respect of each ECRS does not exceed the basic exemption limit. Achha. Oh, it is not exceeding basic exemption. Okay. You are required to state with reasons whether the CESC is still required to file a return. Okay. For the year 25-26 in each of the following independent situation. Okay. Now, Manish and Sons HUF has sold a residential house on which they got capital gain of 12 lakhs, which was invested in capital gain bonds under 54EC. So no capital gain was taxable. Now the question is, if there is no such tax liability coming because you have invested the amount and hence the tax payable or the tax liability becomes zero, are you still required to file return? Students, I'm asking you all. Okay. Lokesh has given me one answer. Okay, Gulika has given me an answer. But Gayatri, his taxable income is zero. It is not exceeding the basic exemption limit, and that they have mentioned also at the start. In the first part of the question, before coming to the specific scenarios, they have already mentioned that it is not exceeding the basic exemption limit. And as you can see, whatever was the capital gain has been fully invested. So in this case, how will you apply the return filing provision? See, firstly, understand students, the person is individual or HF. So when the person is this, the rule says, section 139(1) says that they are required to file return only if their income exceeds the basic exemption limit. Now we know what is the basic exemption limit, 2.53, etc. But there is one, you can say, rider in that. That rider says that this condition, that if your income exceeds basic exemption limit, only then you are required to file the returns. This condition has to be read like this: your income before allowing any exemption or any deduction under Chapter 6A exceeds the basic exemption limit, then you have to file return. And if your income before allowing the exemption or deduction under Chapter 6A is not exceeding the basic exemption limit, you are not required to file return. So understand the logic. See, I have 50 lakhs as my income, but I have made appropriate deposits in various sections of section 80C, 80D, DD, DDA, 80U, 80G. I have multiple sections option, and I have, let us say, invested, made certain payments, because of which my final amount becomes only 1 lakh. Or let us say, like if my 50 lakhs is including any of capital gain, which I have reinvested, the law says, since my income before claiming these special benefits was exceeding the basic exemption limit, so the department would like to check that if you are claiming any of these special benefits because of which you are not paying tax, in fact, the department is more interested in checking your case, because without these special benefits, you are liable to pay tax. But because you have claimed these special benefits, you are not going to pay the tax. So in fact, we want to check you first. Let me tell you, in past 2 years, income tax has identified that many people, especially salaried individuals, and shockingly, many from government departments and offices have claimed wrong deductions, wrong HRA exemptions. Wrong means which they were not entitled to. But by producing some fake rent receipts, by showing some exemption deduction, which actually they are not entitled to because they have not done any of those payments. And strangely, one more racket was unearthed last year, where, if you know, there is a section which I think we discussed in the previous class also, payment to political parties, 80GGB, 80GGC, where if you make payment to political parties or electoral trust, you get deduction. Plus, you have 80G donations. Government unearthed such institutions, which includes obviously political parties registered with Election Commission of India and trusts registered under 80G, where people have paid donations, no doubt. People have given contribution, but they have also got it back. So it was just an entry done for getting the deduction. So such cases have been unearthed in last 2 years. And why I'm telling you this, so that you understand the ideology of the section. See, these sections are crafted, some specific exclusions, conditions are put in, keeping in mind some practical situations. So where your income before allowing these special benefits under the law, like exemption and deduction, is exceeding the tax limit, the basic exemption limit, and after this, in fact, it is below the basic exemption limit, then in fact, as a lawmaker, as a law implementer, I'm more importantly interested in your details. So you have to file your returns. So here, since the income which is earned before the exemption deduction by Mr. Manish and Sons, who is HF, is above the threshold limit, they are compulsorily required to file their returns under 139(1). Please understand this logic. It will be easy to remember the condition and hence applying the question. Next is Mr. Sarth has incurred expenditure of 120 towards electricity. It was made through his banking channel. Now, again, the first rule is only where you have taxable income, you are required to file returns. However, there is a list of certain transactions which if you have entered into, like we saw one more previous sum, where you have applied for credit card or where you have purchased some lakh where the stamp value exceeds 10 lakhs. So there is a list of transactions, one where quoting of PAN is important. Similarly, there is a list of transactions where irrespective of your income, if those transactions are done by you, you have to compulsorily file return. And one such transaction is if in a year your electricity bill, electricity consumption, whatever you say, exceeds rupees 1 lakh. It makes no difference whether you pay it through cash or through banking channel. But if your electricity consumption is exceeding rupees 1 lakh, you are required to file returns. Now somebody will say, sir, how is that connected? It is very much connected. If your electricity bill is 1 lakh, it means you have a decent income because this is only one expense of your household. And if household business, whatever it is, and if you are spending so much on electricity, it proves that you would be having different electronic gadgets in your house. That is why you are having such huge bill. So indirectly, government is linking your income earning capacity through what expenses you are making. You are going to foreign tours, you are spending on electricity so much, you are having so many bank accounts, your bank withdrawals are so much, your bank deposits are so much. What it suggests that if a person is having those transactions, there is a possibility that the person would be having income to fund that. So if somebody is paying electricity bill of more than 1 lakh, it shows that other expenses combined, definitely his expenses would be exceeding threshold. And if his expenses are exceeding threshold, then by default, from where is he funding those expenses? We would like to know. So we want you to file return. So return may not only be linked to your incomes, it may be also linked to certain other transactions. Then briefly mention the provisions of ITL Act with regard to quoting Aadhaar. So this is a theory question. You are expected to learn. Again, quoting of Aadhaar has been made obligatory in certain cases. One, whenever you are applying for PAN, and second, in your returns. Further provisions of 139AA require quoting of Aadhaar would, however, not apply to individual who does not possess Aadhaar number or the enrollment ID and is residing in the states of Assam, Jammu, Kashmir, Meghalaya, or the person is a non-resident. So for them, this condition has been relaxed. For other persons, this is important condition. Also, if the person is of 80 years or more, or if the person is not a citizen of India. Okay, next. Again, TDS. Fine. Mr. Vikas received 1020 as a premature withdrawal of EPF. Okay, so the nature of payment is withdrawal from EPF. What is the section applicable? See, payer is the Provident Fund. And aim is this is a very specific payment. So for that, there is a specific section. I know it may not be regularly used by you all because this is very rare. Very selectively this question is asked. So many times students ignore this. Lavanya, it is not 192. Nagaraja, it is not 194P. So neither 192 nor 194P. Very good Vaishnavi, very good Lokesh, very good Kushi. You all are correct. Very good. Gulika, Kushi, Lokesh, Vaishnavi. So the correct answer is 192A. So whenever there is withdrawal from your Provident Fund account, the applicable applicable section is 194A. Let us go to the section to check the provision so that we revise the provision and then we apply it here for the purpose of determining the applicability of TDS. 192A. Premature withdrawal from EPF. Payment or aggregate payment exceeds 50,000. Payer is obviously the trustees of EPF. Pay is obviously the individual employee. Applicable tax rate 10% on premature taxable withdrawal. What is important word over here is this. So 10% is applicable, but on what amount? Not on the total amount. It is on the taxable withdrawal. So in this condition itself, there is an inherent exclusion. Now we need to identify, we need to find out what is that exclusion. So let me take you to that 192A in case by chance you are not much into this section. So 192A, what is the condition? The condition was it is applicable only where it is a taxable premature withdrawal, right? So let us go through the provision in detail so that this will get revised. Huh? What happened? Where is the provision? 192. Oh, where is 192A? Am I missing? No, here they have started with 193, 194. Where is 192A? There is no details. It is. Oh, here, this point I was looking for. So, when we are talking about 192A, this part is important. The exclusion. What does the exclusion says? Exemption from TDS. Withdrawal after continuous service of 5 years. In case of withdrawal before continuous service of 5 years and employee opts for transfer of accumulated balance to new employer, or this termination before 5 years is because of ill health, contraction or discontinuation of business of the employer, or cessation of the employment. Now, this is important. So pay attention, students. When you are excluded from TDS in case of premature withdrawal, so this point, taxable withdrawal, can be understood from here. That is where withdrawal is after service of 5 years, continuous service. So if you are withdrawing, no need of TDS. And if your service is less than 5 years, then why have you discontinued the service before 5 years? Either because you have transferred to another employer, so the balance over here is transferred to another employer, no problem. Or second, you are discontinuing or terminating the business on account of ill health, contraction or discontinuation of business of the employer, cessation of the employment. Now you come back to the question. Now, what is the point given over here? So he received on premature withdrawal and importantly, before 5 years. So had this been more than 5 years, no TDS would have applied, but it is before 5 years. But what is the reason for his termination of employment before 5 years? It is due to ill health. And in this case, as we just saw, it is excluded, means TDS is not applicable. Correct? I hope this point is understood and you'll be able to now recall this. In this particular case, there will be no TDS deduction liable, even though the amount exceeds 50,000, because the reason for discontinuance of service before 5 years is ill health, which is one of the excluding criteria. Next. Indian bank sanctioned and disbursed loan of 12 crores to B Limited. Okay. B Limited paid 1,20,000 as service fee. Okay. So loan processing fee is paid. So the payer is B Limited. So payer is company, no problem. What is the nature of payment, students? So that we identify the section. Then we go to the threshold. We go to the exclusion. And then we go to the tax rate if TDS is applicable. Kushi, it will not come in withdrawal beta, because right now the payment is made by the company to the bank. Withdrawal would be when the company is withdrawing the money from the bank account. Here it has not yet withdrawn. We are required to assess the TDS applicability on this payment made by the company to the bank, and the nature or the language uses loan processing fees. Interestingly, there is no section covering this. Is it a professional fees? Answer is no. It is a contract payment. Answer is no. It is neither rent, it is neither dividend, it is neither commission. It is no such payment. It is not covered anywhere in any section. However, many times it is mixed, it is confused with a section. So that is this 194A. Wrongly, it is mixed with the section of interest, because interest is paid to banks or bank pays to you. But there is one more interesting point. If you are paying any money to the bank, anyways, I'm sure there is an exclusion which you all would be knowing, like how we discussed earlier. Payment made to government is exclusion, no TDS applies. Similarly, if you are making payment of any amount to banks, you are not supposed to deduct their TDS. Bank makes payment to you, they can deduct your TDS. You are making payment to banks, you will not deduct their TDS. So for 194A applicability, anyways, this is not going to apply because you are making payment to bank. But anyways, as I said, there is no section covering this payment in the TDS list. But yes, many times people mix 194A, but that also will not apply. Reason number one, 194A covers interest. This is not interest. This is loan processing fee. And biggest point, the main reason which can be your starting point of answer itself, what irrespective of nature of what the payment is, since the payment is made to a bank. So when you are making payment to bank, there is no TDS. Like how when you make payment to government, there is no TDS. On similar lines, when you make payment to bank, there is no TDS. Okay. Now they are saying even though the service fee is included in the definition of interest. So that is how they are applying 194A. But since the payment is made to bank, hence it will go out of the purview of TDS. Fine. Okay. Next. Mr. Deepak wishes to purchase. Good. I was waiting for this type of a question. So there is a purchase of a house. So house represents land or building costing 60 lakhs from Miss Priya, Chennai. That makes no difference. Stamp duty value 65 lakhs. He also wants to buy agriculture land in rural area for 65 lakhs. Both the buyer as well as sellers are residents in India. Now here the payer is individual. Okay. Nature of payment is purchase of immovable property. First one is building, second one is land. So first, as usual, identify section, threshold, exclusion. Once you cross this, you will get the answer for tax rate. So students, any section you recall relating to this? Payment for immobile property. Very good, Vaishnavi. Yes. So Vaishnavi has rightly pointed out the section for payment towards immobile property is IA. See, payment on transfer of immobile properties. Payer is any person being a transferee other than person referred to in LA responsible for paying compensation for compulsory acquisition. So if there is compulsory acquisition by government, government is required to deduct TDS under LA. Anyways, we are not government, so we are not covered there. Recipient is resident, payer is resident. Which column is this? Pay. So pay is the transferor. Rate is 1%. Fine. What is important is this. At the time of credit, that is okay. Now, okay. I was looking for something. Yes, now it is here. So payment of transfer of immobile property other than agricultural land. So already the section provides exclusion for TDS on agricultural land. So there will be no TDS on the second payment that you are making, that is agricultural land. Now we come to the first payment, that is for building. Here, what is the threshold? Threshold is rupees 50 lakhs. And how 50 lakhs is to be ascertained? Consideration for transfer or stamp value. It means if any one amount is 50 lakhs or exceeding 50 lakhs, TDS would apply at the rate of 1%. So going back to our example, for two payments, agriculture. Sorry, agriculture land, no TDS. Residential building, two values are given, actual consideration, stamp value. Both are exceeding 50 lakhs. Hence, there will be TDS. So TDS will be applicable over here. Now, the question is TDS will apply on which one? So TDS applies, yes, but on which one? The answer is on whichever is higher. So you will be deducting TDS at the rate of 1% on 65 lakhs. Yes, very good, Gulika. Very good, Nagaraja. Correct, Kushi. Very good. Yes, correct, Lavanya. So you will be deducting TDS at the rate of 1%. Next, ABC company partnership from having car dealership showroom. Okay. See, certain things, the moment you read, na, you should have some bells ringing in your minds that on which line this could go. So generally, motor car related generally is more towards TCS. So let's see. They have purchased cars. Sorry, they have purchased. What is this dash two? I did not understand. Hmm. So what is this two? Okay. They have purchased car for 2 crores from XYZ Limited car manufacturer. The cost of each car being more than 12 lakhs. They sell the cars to individual buyers at a price yielding 10% margin. Okay. Turnover of ABC and XYZ was less than 10 crores. Okay. So multiple things together. So one is car. So for car, there is a specific TCS provision. Plus, they have given turnover of previous year. So they are also hinting you towards 194Q, which is TDS on trading of goods and car is goods. So now we have to analyze it from the perspective of both sections, TDS, TCS. So ABC company is a partnership firm having car dealership. During the year, they have purchased multiple cars, obviously, from their car dealer. And during the year, the number of cars not given over here, but the total value of cars is rupees 2 crores. And they have specified that whatever is the car, every car is about 12 lakhs. Now, why this 12 lakhs is given? Because if you go to the TCS provision, the requirement for TCS arises only where it exceeds a particular amount limit, right? Second, it further says they sell car to individual buyers, yielding a profit margin of 10% on cost. Now, if the cost of car is more than 12 lakhs, obviously after adding the profit margin, 10%, so the sale price would be exceeding 13.2 lakhs. And the turnover of both was less than 10 crores. Now, if the turnover of both was less than 10 crore in the previous year, anyways, 194Q is out of question. Now the only thing that is left to be checked is TCS on motor car. So let me go to that provision. Nobody has given the answer of TCS. It means you're not knowing about TCS. Shagufta, LA is where government is taking over your property under compulsory acquisition and government gives you the compensation. That is LA. IA is when you sell the property in normal course. So where it is a normal sale of property, it is IA. When it is compulsory acquisition, it means the payer is government, it is LA. Yes, Gulika, correct. I was waiting for this. Yes. So now you all have gone to TCS. Good. Lokesh. Nagaraja, there is some typo. Okay. So let me take you to the provision. So searching like this is sometimes painful. Now see, what does TCS provision says? Sale of motor vehicle of value exceeding 10 lakhs. TCS is 1% of sale consideration. And interestingly, now this is where a dealer is selling to whom? To the customers. Where there is a sale of motor vehicle of value exceeding 10 lakhs by manufacturer to dealer, then this 206C1F, which is a specific section for TCS, does not apply. So specific section for TCS will apply only where the transaction is between the dealer and the customer. But where the transaction is between manufacturer and dealer, it will not be covered in this TCS provision of 206C1F, which is the specific provision for motor car, then it may get covered in 194Q and parallelly 206C1H. Both are parallelly for the same purpose, that is trading. But then what is the requirement? It will apply, yes, if the turnover of the dealer exceeds 10 crore in the previous year and the value of motor vehicle purchase exceeds 50 lakhs. Then TCS will not apply. Why? Because we have seen that above in the previous example, that if TDS is applicable on trading of goods, TCS will not apply. Similarly, where sale of motor car of value not exceeding 10 lakhs and aggregate of all motor cars sold by the seller to the buyer is less than 50 lakhs, then anyways, there is no TDS or TCS which applies. Next, sale of motor vehicle of value not exceeding 10 lakhs, but aggregate turnover of all motor vehicle sold by the seller exceeds 50 lakhs in the current financial year, then TDS, yes, if turnover of buyer exceeds 10 crore in the previous financial year, and no, if buyer is required to deduct TDS, then no TCS. Yes, if buyer is not required to deduct TDS. So point is that first you have to check our transaction is what. If it is between dealer to customer, 206C1F applies. If it is between manufacturer and dealer, then you have to check applicability of TDS under 194Q. If that does not apply, check applicability of TCS under 206C1H. Now, applying all these points, we find out the answer for the given case. Now, interestingly, in this, both things are mentioned. One, there is a transaction between the dealer and the car manufacturer, plus at the same time, there is a transaction between the dealer and the customer. Now, we analyze both one by one. With respect to the transaction between the dealer and the customers, since you are selling the price which is yielding 10% margin, it means your cars are exceeding 10 lakh criteria, which is the criteria here. So where the value of single motor vehicle exceeds 10 lakh, then 206C1F applies. This is between dealer and customer, and it is applicable in our case because definitely the car value exceeds 10 lakhs because the cost itself is 12 plus 10% margin, that will exceed 10 lakhs definitely. So for a transaction between dealer to customer, there is 206C1F TCS applicable of 1%, which the dealer will collect from the customer. Second part, between car manufacturer and car dealer, 206C1F does not apply. For them, you have to check 194Q. For 194Q TDS, you have to see the buyer. The buyer is the car dealer. The turnover of the buyer is below 10 crore. So 194Q TDS does not apply. Then you go to 206C1H TCS, where seller's turnover in the previous financial year should exceed 10 crore. Even seller, that is the car manufacturer's turnover, is below 10 crores. So on the transaction between the car dealer and the car manufacturer, there is neither TDS, there is neither TCS. But on the transaction between the dealer and the customer, there is TCS under section 206C1F at the rate of 1%. I hope this is clear to everyone. Correct, students? Understood, na? Perfect. Great. So students, we conclude over here. I'm sure this exercise would have helped you. And I'm sure now you are more favoring TDS chapter also. In case if you had by chance kept it in option, now you'll definitely take up TDS more positively, TDS, TCS. And yes, let me tell you, just solve 20 questions on TDS, TCS. Go to the provision. Don't see the answer. We don't need answers. Please, I always am of the strong believer that for revision, looking at answers is the biggest mistake. You are revising the provision. So go back to the module. Go back to the provision. Read the whole provision. That is how you will revise. Correct? Perfect. Thank you. Thank you very much, students. Please study well. We are there to support you in all possible manner. But the first step has to be taken by you, where you need to take up the charge and you need to go ahead. Okay. Shagupta is asking me, sir, can you please explain 234C? See, 234A, B, C. All three sections are for interest. A is easy. A is for filing your return beyond the due date of 139(1). That is simple. B and C are related to interest on late payment of advance tax. Correct? Now within this 234B, when it applies, 234C when it applies, has to be understood. So 234B applies after the end of financial year. So let us say we are talking about the financial year 24-25. 234B will be computed from 1st April 25 till the date of payment of tax. But 234B will apply if out of the advance tax liability, you have paid less than 90% of the total advance tax. So 234B will not apply either if you have paid the full advance tax or you have paid any advance tax which is 90% or more of the total advance tax liability. Now, 234C will apply on the basis of respective quarter's advance tax. So every quarter you have to pay advance tax. How much you are given a percentage? 15, 45, 75, 100. Correct? So depending on that, you are required to deposit the advance tax quarterly. Now in this particular case, advance tax interest applies under 234C, where let us say in first quarter you are supposed to pay 15, you have paid 12% only, 10% only. So on the shortfall, you pay interest. Now this interest will be calculated only for 3 months because the second installment is after 3 months, which is for second quarter, where let us say you are supposed to pay 45%. Now I will check how much you have paid till the due date of the second quarter. I will compare it with 45%. Now while checking this, I will also include the payment which you made in the first quarter, add it with the second quarter payment because we are comparing the cumulative 45%. So total payment you have made till the second quarter due date compared with 45%, whatever is shortfall, interest. So beta, this is how 234C interest is calculated. Shagufta. Is this clear, beta? Nagaraja, beta, there is straightforward definition given of works. In fact, while we were discussing, I think the very first question of 194C, we discussed the works definition, which includes advertisement, which includes supply of labor, which includes transport, which includes catering. All these are contract for works. That is defined better. Fine? Okay. So students, if your queries are done, we conclude. Please study, refer module, refer our past exam questions. Very important. Sir, sticking with section number of TDS provisions, I can recall, but sticking with man 192A or 292(1)A, like that, confusing. Any shortcut? See, beta, many times certain section numbers have to be ratified. So here TDS is one such chapter, unfortunately. So see, I cannot give you any shortcuts here, but yes, shortcuts will be, you have to develop your own illogical logics. Normally, I call it like this. So what are illogical logics? Like if it is 192A, and if you are finding it mixing with 192(1)A, you have to find out some logics, how you differentiate between the two sections. Otherwise, there is no shortcut, beta, either ratifying or developing your own logics which help you remember, right? So unfortunately, like some are easy. 194C is easy because C for contract, but that may not apply everywhere, right? So, but yes, it is an effort. Otherwise, the best thing is ratify it. And anyways, the best way to do it, beta, is solving it with a practical question. Take a practical question, read the section. Take a practical question, read the section. I tell you, the more number of questions you solve, it will get automatically submerged. Correct? Perfect. So thank you, students. Thank you very much. Please study well. Good night, all. Thank you very much.